Essential crypto terms for beginners. As the cryptocurrency market continues to expand, newcomers often find themselves overwhelmed by the specialized vocabulary used by enthusiasts and professionals alike. Understanding these key terms is crucial for navigating the crypto landscape effectively. This guide will cover the most important crypto terms that beginners should know, providing clear definitions and context for each. Altcoin. Definition. An altcoin is any cryptocurrency other than Bitcoin. The term encompasses thousands of different cryptocurrencies, each with its own unique features and use cases. Examples include Ethereum, Ripple, and Litecoin. Blockchain. Definition. A blockchain is a decentralized digital ledger that records all transactions across a network of computers. It consists of a series of blocks linked together, ensuring data integrity and security. Each block contains transaction data, a timestamp, and a cryptographic hash of the previous block. Coin versus token. A coin is a digital asset that operates on its own blockchain. For example, Bitcoin is a coin on the Bitcoin blockchain. On the other hand, a token is a digital asset created on an existing blockchain. Tokens often represent assets or utilities within a specific ecosystem. For instance, Chainlink or Link is a token on the Ethereum blockchain. Cryptocurrency exchange. A cryptocurrency exchange is an online platform where users can buy, sell, or trade cryptocurrencies for other digital currencies or fiat money. Some popular exchanges include Coinbase, Binance, and Kraken. Wallet. A cryptocurrency wallet is a software application or hardware device used to store, send, and receive cryptocurrencies. Wallets manage your public and private keys, which are essential for accessing your funds. Private key and public key. A private key is a secret alphanumeric code that allows you to access and manage your cryptocurrency holdings. It must be kept secure to prevent unauthorized access. On the other hand, a public key is a cryptographic code that allows users to receive cryptocurrencies into their wallet. It can be shared publicly. Smart contract. A smart contract is a self-executing contract with the terms directly written into code on the blockchain. They automatically enforce and execute agreements when predefined conditions are met, enabling trustless transactions. Fiat currency. Fiat currency refers to government-issued money that is not backed by a physical commodity like gold or silver. Examples include the US dollar and the euro. In crypto contexts, fiat currencies are often converted into cryptocurrencies for trading. Gas fee. Definition. Gas fees are payments made by users to compensate for the computing energy required to process transactions on the Ethereum network. The fee varies depending on network congestion and transaction complexity. Bull market versus bear market. Bull market. A market condition characterized by rising prices and investor optimism. Bear market. A market condition where prices are falling or expected to fall, leading to pessimism among investors. Initial coin offering, ICO. Definition. An ICO is a fundraising method in which new cryptocurrency projects sell tokens to investors in exchange for capital before launching their product or service. ICOs have become less popular due to regulatory scrutiny but were once a common way for projects to raise funds. FOMO and FUD. FOMO, or fear of missing out, is the anxiety that arises from believing others are benefiting from an opportunity while you are not participating, often seen during price surges in crypto markets. FUD, which stands for fear, uncertainty, and doubt, is negative information spread about a cryptocurrency or project intended to manipulate market sentiment or prices. Market capitalization, or market cap. Definition. Market cap represents the total value of a cryptocurrency, calculated by multiplying its current price by the total number of coins in circulation. It provides insight into the relative size of different cryptocurrencies in the market. Liquidity. Definition. Liquidity refers to how easily an asset can be bought or sold in the market without affecting its price significantly. High liquidity indicates many buyers and sellers are present in the market. Fork. A fork occurs when there is a change in protocol rules within a blockchain network, resulting in two separate chains. Hard forks create new currencies while soft forks do not break backward compatibility. Decentralized finance, or DeFi. Definition: DeFi refers to financial services built on blockchain technology that operate without intermediaries like banks. DeFi applications enable lending, borrowing, trading, and earning interest on cryptocurrencies. Whale. Definition: a whale is an individual or entity that holds a large amount of cryptocurrency, enough that their actions can significantly impact market prices when they buy or sell. Seed phrase. Definition: a seed phrase is a set of random words generated when you create a cryptocurrency wallet. It serves as a backup method for recovering access to your wallet if you lose your private key or wallet access. Familiarizing yourself with these essential crypto terms will help you navigate the complex world of cryptocurrencies more effectively. Whether you're looking to invest, trade, or simply understand this innovative technology better, having a solid grasp of these foundational concepts will empower you as you engage with this dynamic space. By understanding these terms, beginners can build confidence in their knowledge and make informed decisions as they explore opportunities within the cryptocurrency ecosystem.